This is the Rich Dad StockCast with Andy Tanner, the show that kicks 401ks in the asphalt and teaches you to be the master of your own stock investing domain. And here's your host, Greg Arthur.
Hey, Andy, real quick, I don't want you to talk for a minute. I want to tell the listeners and the viewers something. All right? Shh. What if you could make money in any situation? Corona, hyperinflation, the next ice age. All right, maybe not any situation, but wouldn't that be amazing? Like, wouldn't that relieve so much stress? Like, how would that feel? What if you could invest in the stocks and not care if the market went up or down? Would that be great if you didn't have to care because you knew you could make money either way? How'd that feel? How did it change your life? I can tell you how it changed mine. I wouldn't have to worry next time my kid gets sick. If you want that, if you want the ability to profit in nearly any situation, then I want to tell you something. Andy Tanner, the star of the show, teaches all that. Andy teaches you the tools for financial freedom. So go to the show notes, click on any of his links. He's got free education, free trainings. He's got links to his actual course. All I can say is go to the show notes. Andy, I know I didn't prep you for this, but it's important. Like, you give all of this time to everybody listening, everybody watching, and just people need to be able to get more Andy, take advantage of what you teach. And so I wanted to create this little commercial for you.
Well, I wasn't prepared for that commercial, and that's a pretty high bar.
Well, let me tell you something. If I told you I was going to do it, you wouldn't let me. So,
Geez.
So there you go. Boo.
You know, all those things you said, I do think there are opportunities in every market. I really do. I think there's also risks in every market. And the difference is knowing how to manage those things and understand what you're getting into, because there's always risk, there's always reward. And that's what financial education helps us understand. So thank you as always.
Of course.
Part of the reason we do this is so people can get to know us a little bit and see if they'd like to learn more. So I appreciate it.
All right. So click on the notes, people. So if you listened to last week's show, Andy said something that it kind of floored me. I know it to be true, but it was actually it was a bold statement, and I hadn't actually thought about it the way Andy said it. And he said, price doesn't matter, which come on, who says price doesn't matter?
Now, don't let my wife hear that when we're on Rodeo Drive.
All right. How about
we're in Crystals in Vegas? Okay, let's not let this out to her. He might take that to heart. What maybe I should say, I should not make a blanket statement. The price doesn't matter. But in investing, often price doesn't matter, and it certainly doesn't matter as much as so many other factors. So this is a great conversation to have in so many different ways. And if a person listens with the right type of listening ear in the right context, you can begin to shift. Robert talks about his cash flow quadrant with the employee, self-employed, business owner, investor. And we talk about the context, and they think differently. And for a lot of us, it takes time to go from the employee mindset to the investor mindset. This is an opportunity to begin to change your context if you tune in and listen to this conversation intently.
Well, and I'm going to say there's two different scenarios, and there might be more. But Robert Kiyosaki, he just bought more Bitcoin, right? And he's like, we said, well, what'd you buy it at? He's like, I don't care. He's the price doesn't matter. So
price doesn't matter.
And I think that's a different context than what you're going to teach us about. But so in Robert Kiyosaki's way, when you're hedging, he doesn't care what the price of gold is. He doesn't care Bitcoin, because he's not buying it to make money. He's buying it to protect himself from a downturn. But I don't think that's what we're talking about here.
No, there's a lot of different things. First of all, let's go with a bigger picture, and we'll narrow it down to a smaller picture. Consumers, people who consume things, are obsessed with price. Generally, when I'm if let's say I'm in Nordstrom and we're browsing and I see someone pick up maybe a pair of blue jeans or a pair of jeans, and the clerk will come and they'll say, "May I help you?" Usually the first thing out of their mouth is, how much are these jeans, right? And then they make a judgment based on the price. Or I might say, Greg, I have a deal. If you want to invest with me, To get in the deal, it's $1 million. And people make a judgment right there, whether that's a lot of money or little money or whatever. And so people make judgments if their consumer mindset, that context of consumer, price, 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 price. Free is good. High prices are bad. Low prices are good. And that's the way they think about it. Investors tend to think about what we call return. That price doesn't matter. Return on investment matters. That's what matters. It really doesn't matter if it's $1 million if it's going to make me $2. It really doesn't matter if it's $10,000 if it makes me none. It doesn't matter if it's $1 if it's going to make me lose $1 plus some. And so price means nothing. Return on investment is everything to the investor. If you say, Andy, here's a deal and it's a $10,000 investment, that doesn't tell me anything. It doesn't tell me anything. I have no information on whether it's a good or a poor investment. A price isolated in and of itself has no power to tell me the quality of the investment or whether it would be good, bad, or ugly. It is completely meaningless to me because I want to know what the return on investment is, because that's where the investor thinks. And if I say, oh, it's $100,000, well, that's too much money, I'm not interested if I'm a new investor. Well, I might have just last thought on a great opportunity that could have doubled my money simply because I was afraid of a big price. So I would start there, in that for an investor, price by itself cannot tell us anything. It is meaningless. It doesn't matter in isolation of itself. And we train ourselves. So here's what you do to have some fun. Next time you're at Nordstrom and you pick up the blue jeans and the clerk asks you, may I help you? Say, yes, I was wondering what my return on investment is. And they'll call security and have you escorted out because they don't know what that language is. And we laugh at that, right? Because that seems so strange of a question to ask, but it really is true. Price means nothing. Return on investment is everything. And so that's the beginning. Now we'll go further into this, but that's where we'll start.
Yeah. And can I say, it's not just with stocks. It's just that, in my personal opinion, it's easiest to see this in stocks. But same with real estate. If you buy a house in real estate, you put your down payment down, it doesn't actually matter as long as your renters can cover the nut, your mortgage, and then you make a little extra. Then the price doesn't matter as long as you're making money. I have a friend, his name is Channing, and he does crypto investing. And so Channing, he tries to cash flow in crypto. He bought a crypto coin, and he bought it to cash flow, but immediately it tanked, right?
Yeah.
And he's like, well, I don't care. He's like, I didn't buy it because of the price. I bought it because of the cash flow it brings, and it kept bringing him cash flow, or coin flow, however you want to call it.
It's interesting because if I were to look at my financial statement and I were to look at the asset column, accountants look at this in terms of net worth or equity. You know, what are the number if you sold all this stuff, and what is the number if you paid off all your liabilities? What would be the equity? What would be left? I think investors, at least the way I look at it, is I look at it I would look at my financial statement differently. I don't look at how much gold I have in terms of money. How many ounces do I have? I don't look at real estate in terms of how much money is it. How many doors do I own? How much square foot do I have? Stocks, how many shares do I have? Does that make sense?
Yeah.
Because the square footage won't change ever. The amount of ounces won't change. I can't grow I won't go open up a safe and say, oh, look, more gold. It's going to be the same. I won't look at the shares of stock. So it's been fun because Ethereum has been down. It's down about 25% off the $4,000 high or whatever it is. It's a little higher than that. It's down 25%. And yet I look at my financial statement, I have more Ethereum coins than I had when I started doing this. I've been using my Bitcoin cash flow to mine, to create Ethereum. So I'm just looking at it. Am I getting more stuff? Am I getting more stuff? And over time, that tends to take care of itself. Let's change the conversation a little bit though. Let's say this, Greg, if I gave you a Jack in the Box and you could turn the crank once a month, and instead of a clown popping out, it opened up and it popped out a $100 bill. So you knew that every month on the first day of the month, you get out your Jack in the Box, play the little song, pop, it would go, and a new $100 bill come out. You pull it, shut the thing for next month. And once a month, it would do that. Would that be a nice Christmas present? You do it for the rest of your life.
Love it.
Good Christmas present. Okay. How much did it cost you?
I don't know. How much did it cost me?
Well, I gave it to you. It's a gift.
Oh, I love it.
Okay.
Right, zero.
So does it really matter how much the Jack in the Box costs if it does that for you? So think about this. All right. What if the Jack in the Box was not a gift, but it was only $100? Well, after the first month, it's as if I gave it to you for free.
Right.
Does that make sense?
Yeah.
In other words, if it pays for itself, the gift gave itself to you. In other words, as soon as another reason price doesn't matter is not only because it doesn't in isolation tell me anything about the investment, but if it cash flows, it is only a matter of time before it pays for itself. It's only a matter of time. So it's really more about time than price.
Okay.
In other words, I'm going to say, how long does it take to pay for itself? That's the question I'm asking. And again, price doesn't tell me anything. The ROI. The very second, think about this, the very second that my stocks have paid for themselves. So let's say I have company XYZ and I get dividends and I sell options on it. And in a period of 5 years, I own it free and clear. As long as it continues to pay the dividend, it's like having that Jack in the Box that every quarter, whoop, out comes money. And I get that not only for my life, but I get to bequeath that in a trust to my kids and think dynastically. Once it's paid for, I would not care about the up and downs of its price. In other words, Warren Buffett bought Coca-Cola at $3.25 a share. That's where he bought it at. Today, it's probably in the 60s or something. But he doesn't care because his dividend is about $1.30, $1.20, whatever it is every year. That thing pays for itself every 2 years or so. So he really doesn't need to care about the stock price because he has no money in the deal. It's just as if you had that Jack in the Box given to you now. Price doesn't matter once it's paid for. You now have a Jack in the, he'll never sell the Coca-Cola because why would you? It's almost like giving someone a golden goose. It's the golden eggs coming out. You're not waking up every morning saying, how much can I sell my golden goose for? How much can I sell my golden goose for? That the price of the golden goose is not what we care about. It's, hey, did we get an egg today? Did we get a golden egg today? It's the return. And so people, when you speak about whether it's an investment that returns you money or investment that returns you something else, any way you look at it, the price doesn't matter. It's the return on investment that matters, and it's the idea of how quick can it pay for itself, and can I accelerate that?
So can I change it just a little bit? And that is, so my wife and I, right, we're looking at buying another real estate property.
Yeah.
But then we changed the way we looked at it and we started looking at opportunity cost. And so we started looking at, do we want to instead buy stocks and option them every month, which it makes more money than if we buy a real estate, and we can break even on the stocks much faster than we can on the real estate. And so it created this big discussion because she's a real estate girl. It created this big discussion on the opportunity cost. And the way we did measure that was on how much time it took to break even.
It's interesting because the conversation, I had a guy ask me the other day, just yesterday, says, is it a good time to buy a house? And again, he says, our price is good, is what he's asking. He's obsessed with price. And what I said to him, I said, well, see if the following statement rings true. If you find yourself successful in moving towards your goals, is that success going to be a function of the prices of current assets today, or your knowledge and personal growth as an investor? In other words, success is not a function of the asset, it's the function of the investor. And if everyone listening pauses and thinks about 2022 moving forward, if you get closer to your goals this year, is it going to be a function of housing prices and where they are now? Or is it be a function of how smart you are as an investor in understanding ROI? I think either way is go. I think one of the things people get screwed up in is they go, well, is business better than real estate? Is real estate better than stocks? Is stocks better than Bitcoin? Is Bitcoin better than, I have all of those things. And I don't even think I'm necessarily very good at any of them. Like, I'm not as good as real estate as Kenny is, and I'm probably not as good at Bitcoin as other guys, but I have my 4 pillars, and I have enough financial education that I've been able to, I've lost money and things too. I make my mistakes, but to me, the price is irrelevant. Here's the other reason price is irrelevant. If it's a good deal, you can raise capital to get it, because there's too many problems. People that don't have enough and people that have too much. I remember Robert called me one day and he goes, hey, I think I'm going to buy some silver because I'm trying to find a place to put some money. And I says, he says, I've got too much. I'm afraid that my money is losing value because we're printing so much of it. And I just got a check for $5 million because Kenny sold a project and he's giving me back my money plus some. I got this $5 million. What am I going to do with it? And so he's looking, where can I spend it? So there's people hunting for places to put that cash back to work. In other words, they don't want the cash, they want the asset.
Right.
They want the ounces of gold. They want another door. They want the other share of stock. They want the stuff I was talking about, not the cash. And so they're always trying to get it out. Well, if you're the person that finds an ROI for him, it doesn't matter if it's $100,000, $1 million, or $2 million, or $5 million. There are investors that will say, hey, if you have a good place to put my money, I'll let you share in the success too, if I can share in the success. That's what raising capital is all about. So, like for Kenny, the price doesn't matter. If he goes to a real estate project, okay, and he sees that it's 100 units, 175 units, 275 units, 300 units, 500 units, it's huge, whatever it is, the price of that property does not matter to him at all. It's meaningless, because if it's a good deal with a good ROI, he'll raise the sufficient capital. It's not a barrier. And so price is not a barrier to those that can raise capital, and price is meaningless to the investor because he's looking at it not in the lens of, well, the most I can go is $1 million. That's my max price. He's saying, no, will this give me an ROI? And if it does, well, great, we'll raise the money. The price is not an issue. So when I say that, I don't say it flippantly that, price doesn't matter, but I say literally, price doesn't matter in terms of research, because in and of itself, it doesn't give me any information. Price doesn't matter in terms of owning the asset, because if it pays for itself, it doesn't matter what I paid for it. If it pays for itself, I have an asset that'll pay me for the rest of my life, generationally, mine and my kids' lives. And then third, price doesn't matter, because if it's a good deal, you can raise the money and it doesn't have to be yours anyway. So price is truly becomes less and less relevant, where to a new investor, you say, here's a great stock. Well, how much is the stock?
Right.
Oh, it's whatever a share. Warren Buffett bought Apple when it was when it was over $200 a share, I believe. It's split a couple times since then, but he didn't get that at bargain basement, right? He just bought some Snowflake, and Snowflake went public at well over $100 a share. So it isn't the price, and that's what everybody, here's a great stock. Well, how much is it? Well, that's too expensive. How do you know? Yeah, okay, now that's why we have valuation ratios: price to book, price to earnings, price to sales, price to free cash flow. Here's the price determines what I pay, but the valuation is telling me what I get. This is the book value I get for that price. This is the amount of sales I get for that price. So that's great stuff. Last thing I would say on this is, my business is financial education. So one of the things, and I didn't become an educator because I beat Warren Buffett in investing contests. better than me. But I became an educator because I said, well, what can I give to the world? And I found not much. I can put a star on a Christmas tree and change this light bulb without a ladder right here. But the fact of the matter is, one of the things that I think everyone has a talent, and mine was to make stuff simple. And so I went into the education business. And I remember I horsed around with someone with Price. I was in an airport and ran into an old high school buddy, not really a buddy, a schoolmate, I should say. Oh, Andy, is that you? Oh, how are you, Danny? Where are you going? I'm going to San Diego. What? I'm going to investing conference. I'm going to teach in stock trading. He goes, really? Like stocks and stuff? Yeah, I like stocks and stuff. He goes, how much is it to go? And I told a little fib. I said, well, it's $50,000. Just so he could see a price, right? And he lost his mind. He said, 50,000. The guy completely melted down and lost his mind. Of course, none of my products are 50,000. That's college, right? College will do 50,000. And the guy says, he says, $50,000. And I says, hey, what do you drive? He goes, well, I drive a BMW. And I didn't know what he drove, but I said, well, let's just pretend, it's probably more than 50,000. I says, I have 2 or 3 cars, got some toys, I have some vehicles. And I took out a napkin and I drew A to B. And I said, what's the purpose of the car, other than status and looking good in it? He says, well, it's to get me to A to B. And I said, and then I drew this, I drew an ES and a BI next to it. And I said, there are so many people that wish that they could get to investorship or entrepreneurship and have a job. And I go, education is the vehicle that you use to drive to that place. And I said, I've spent a lot more money on my education than any of my cars, but it's the best vehicle. It's the vehicle that's most precious to me because it took me where I wanted to go and the price didn't matter. I go, you're willing to buy a car to take you to a job. Are you willing to spend the same amount to come to a conference to take you away from the job where you never have to drive there again? And it really had an impact on him.
Oh, yeah.
And then I actually said, no, my stuff isn't $50,000. But it was fun to mess around because he freaked out because of the
price.
And the price does not matter. It's what you get. You pay the price once.
Yeah.
Done. Yeah. You get the benefit or the bad thing, whatever it is, you get the return for the rest of your life. And so that's my spiel on price.
Well, thank you. Hey, we do got to go. Again, show notes, click Andy, all those good things. Get more Andy. But also, if you're liking Andy, there's another way to thank him, and that's to click on the follow, the like, the subscribe. I don't know those buttons too well, but and help the show get out to more people. So thank you, Andy.
That would be kind. If you felt like what we talked about would help someone else, that's a great idea. Thank you.
Well, thank you. All right, everybody. We'll see you next week.
Love you, Greg. We'll see you.
You too. Thanks, man. Bye.